Welcome to China Tech Talk, a weekly discussion of technology and startups here in China. I am John Artman, editor-in-chief of TechNode, and as always, I'm joined by Matthew Brennan, founder of China Channel. And so this week we're talking with Ling Kong, the Chief Technology Officer of Dianrong. And Dianrong is a fascinating company because, they started off when peer-to-peer lending first started to grow, and they have come out ahead as one of the leading peer-to-peer lending and fintech companies. And so we talk about a lot of different things. Some things actually a little bit unexpected. I thought we were going to talk mostly about peer-to-peer lending, but we end up talking about a lot more than just that.
Yeah, I think it's got. We touched upon a lot of points that we've been talking about in different episodes when we're covering the fintech area, and it's really nice to get Ling, who's like a CTO of one of the top companies in this area, also echoing and expanding upon a lot of the points that we've covered previously. So I found that really, really nice. Obviously, the guy's got, he's deep in the industry, and he's able to expand and give a really clear, concise vision of how certain things are working in this industry.
Yeah, exactly. And it was really cool to hear kind of, how their peer-to-peer lending platform works, both from the lender side, but also from, the lendee side. But then also to hear about, all the other things that Dianrong is doing. And then towards the end, we also talked a little bit about blockchain. It's pretty clear that Ling is very interested and very passionate about blockchain. And he proposes something that he proposes an idea about blockchain that you actually don't hear very often. These days, a lot of it's ICOs and Bitcoin and things like that. But he's able to sketch out a version of blockchain, that actually is centralized. It's a private blockchain. And I think really this is kind of what the Chinese government is going to be looking at when they are developing their the digital currency, which they probably already are developing. But Before we jump into it, just one quick note. I just want to make sure that you know that at the beginning there is a bit of popping from Ling, but that issue does get resolved very, very quickly into the episode. So if you hear that and it bothers you, just keep listening, and it will go away, and it won't be a problem later. But with that, we give you Ling Kong, CTO of Dianrong. Well, Ling, thank you so much for taking the time to join us today.
Thank you very much for having me.
So the first question that we like to ask all of our guests is to tell us your story. How did you come to join Dianrong, and what were you doing before?
So I grew up in the States, studied in computer science and psychology. So I was always a serial engineer. Dianrong is actually my fourth startup. So about 10 years ago, I was sent back to China by Microsoft to build Windows Azure, which is their cloud, service provider. And eventually leaving Microsoft because Microsoft isn't that localized to deal with the Chinese market, I went into essentially video games and mobile video games. And at that time, I actually had quite a bit of success with the gaming industry. There was a time in 2013 that I started to realize that I wasn't doing much except for culture-wise, right, for the society with the companies that I was building, via video games. So at that time, I was looking for something that was more interesting or bigger, and I came across Sol, who was doing Lending Club in the United States, and he explained peer-to-peer lending to me. And also back then, I think China was devoid of a lot of financial services that made this economy or the lives of people better. So after some serious consideration, I decided to join Dianrong. This was back in 2013.
Dianrong as a company is a P2P, so a peer-to-peer lending company. But for people maybe who haven't really heard about this before, I mean, how would you explain P2P lending to someone who really has never heard of it before?
Okay, so to be more correct, I think we are more of a financial technology company. So we're known as a fintech company. Now, peer-to-peer lending is one of the primary services that we do provide with our technology. So then let's go into peer-to-peer lending. As we know, the world, the financial world generally is based on lending. So essentially, any kind of financial products that we purchase via banks, via mutual funds, even when a company goes IPO, it all has to do with money, our money aggregated together and then lending to someone. So in the case of banks, many times we put our money inside of a bank account, and eventually the banks aggregate them together and lends it out to SMEs, to small and medium enterprises, to people who need homes, to many other services. But in between this entire process, there's a lot of institutions involved. There's the bank institution, which has hundreds or thousands of branches, very heavy infrastructure. There's lawyers, there's Wall Street, there's all these people in the middle providing the professional services and taking a cut out of them. And this was before technology entered the financial realm. So today, peer-to-peer lending platforms, what we do is we cut out literally all of the middlemen that had very heavy and expensive infrastructure, and basically replace them with technology that grabs information and puts them very transparently on a website platform. And in this case, then people can come over here and actually then do private lending, just like essentially it is the same action as if they are lending to a bank or putting their money to a bank, but here they are participating in the actions directly, which means then without all the heavy infrastructure in the middle, there's much less, I would say much less loss, right, in terms of efficiency and much higher returns. But on the other hand, there's also a little bit more risk, right? Because people have to make judgments for themselves on who to lend to and why, and whether this is something that they would like to do or not.
Okay, so from a user perspective, could you describe the experience? Do I go into the platform and then I literally pick a person? Am I like, oh, Bob seems a nice guy, I'll lend him some money? How does it work from a user perspective?
So you can do that. So peer-to-peer lending platforms in another way is called a private debt exchange, right? So it's kind of like how you go onto the secondary market, which let's say the New York Stock Exchange. When you want to lend to a company, you simply pick out a stock quote, and you say, hey, here's a company that I like. Let me look at their information, whatever that's publicly available, and then let me invest in the stock, right? A piece of that company. Peer-to-peer lending works almost the same way, right? So let me find a person I like. Maybe this is a single mother working outside of the Jiangsu province, and she is having some hardships, but I think her historical records are good enough that she will very soon turn around and actually pay for the loans that she's taking out. Or here is a couple of newlyweds, and they actually need a little bit additional money to do home improvement. They want their perfect home, and they're a little bit short, right? So why don't I also give them a little bit of money as well? Right. So what's interesting is that in the, I would say, peer P2P lending model, right? In the very direct model, that's what you do, right? You take one customer, you basically give them a little bit of your money, and eventually when enough people gives them the money that they want, it becomes a full loan, and that person takes the loan and basically spends it towards whatever he or she needs it to be. And eventually, after earning money back, then they would repay the loan. Now, what Dianrong does is a little bit more sophisticated. Just like in, I would say, public stock markets, there are funds associated with many things, right? So, for example, we have our S&P 500, or the top 500 stocks get grouped together so that when people buy it, people buy an average, right? That represents a lot of the industries or the top 500 firms in the world. We can also do this with peer-to-peer lending, or we can then start grouping customers together. Here's all these, young couples who are getting married. Here are all these people who need a car for their mom and pop business, right? Here's all the institutions that needs this for a bridge loan, right? And all of these things could be aggregated together via technology and then be presented to people as if it was a fund. And in this case, then people can actually buy in and basically experience a more distributed way of lending out to people. And as you guys know, in finance, more distribution of your money to many people means much lower risk and much, or rather, the risk becomes more macro economics or macro economy driven rather than every single individual person and their single credit based scenarios. Right.
From what you were describing, there's two ways of as a lender or as a lendee of actually receiving this money. So basically, like as someone who's depositing money into Dianrong's system, like there's two ways. There's I can either choose to I can choose specific people or specific projects, or I can put it into kind of like a larger fund and get returns on that.
Yeah, essentially it works like this. So in general, we don't call it a fund, mainly because funds are regulated by the Security Exchange. So essentially, it is a large aggregation of loans, where then we help people to distribute their money equally into those loans.
And how do you guys insert? I mean, how do you extract value from this? What's your business model here?
So our business model is simply to then take a service fee. So this business model is actually very different from the banks, right? Where the banks are working on an arbitrage model, where essentially they are trying to taking money at the lowest interest rate and then lending out the money at a higher interest rate and earning all that money in between, right? All the interest rate in between. For a platform like us, right, we simply just take a service fee. Right now, the service fee is also a percentage service fee, but it really doesn't matter that much on how high the interest rate or how low the interest rate. We're more concerned about servicing more and more people, as well as basically more and more institutions. Again, this model is very similar to how a lot of the companies on a public exchange work, right? So generally, they're working on a service fee model rather than on an arbitrage model.
Sure. What's the typical rate?
So it actually depends on the situation and on the product. Right? So we have a term called risk-based pricing, which essentially we try to basically recommend a rate that is equivalent to cover the risk associated with this loan or this transaction. So depending on the person, it could actually be very different. So some people without a steady job may actually have a significantly higher rate than those that do have steady jobs. Right. So for example, we would have some loans, right, for personal loans, they can be actually even lower than bank rates, right? So we're talking about very low rates. Maybe less than 15% APR rates, and these rates are actually significantly lower than if you were to borrow from a credit card or from any other, I would say, short duration banking system. Now we do have some loans that are higher in interest rate, mainly because maybe they're unsecured, maybe they don't have anything collateralized in the back, maybe we don't have a lot of information. But statistically, if we loan out enough of these loans, the right, I would say, return would come back to our investors. So we do this much more mathematically.
Yeah, it's super interesting because I mean it sounds like, and I mean, of course, talking to the CTO, of course, we're going to get a pretty good understanding of the technology behind it. But I guess that kind of so how do you differentiate with your competitors? I mean, do you differentiate on technology, on service? What aspects?
I think we mainly differentiate on technology and the technology that drives which services that we provide. So, for example, in Dianrong, using technology to distribute somebody's money into millions of loans, this is actually pretty hard, right? Infrastructurally pretty hard. So some of our competitors, after we pushed out our product, try to copy us, and maybe they're able to distribute somebody's money. Maybe let's say you have $1 and it goes to 1,000 people, and that's the max that they can do. But within their own, maybe $1 for us, right, can go into 1 million people. Now, this means that you're dealing with sub penny transactions. You're dealing with interests that are based on the sub-penny transactions, which means they're even smaller. You're dealing with accounting, with consolidation, with all these kind of math, right? But what's interesting then also is that when you have a million people that you're loaning out your money to, whether it's $1 or if it's $1 million, in this case, you actually have a pretty broad spectrum view of where the money is going to, who are they going to, which I would say provinces or which states, right, which cities, what kind of jobs, right? And then you would then even have more control over that. Maybe then you would like to tell Dianrong that, hey, look, right, I don't really like the traditional auto industry because I don't want to support oil. So can you help me invest my money into more electric autos, right? Or more, or my money towards helping people who are creating startups, right? From let's say my alma mater, right? And all of these choices based on what people start to see and view, then as an experience is given back to the user so that people can actually have control over the money of their own money and where they go to. Right? This is actually a very powerful concept. Most people in the world dealing with any kind of banking system don't really have a choice of where their money is going to, except on the stock market where they directly give it to the company, right? But here in peer-to-peer lending, we can say that, hey, look, all right, if you want to help people, right, maybe you care about an interest rate, so you're not doing this for free, but you also want to pipe your money towards people who are in hardship and need, and their interest rate may be a little higher, but the risk is also higher, but you're still going to get a return. And if it is your choice to do so, then you would actually be much more, I would say, convinced into helping them, as well as much more understanding of hardship situations if it were to occur in these people's lives.
So you're adding sort of elements of altruism and charity into this.
So it's much more about the elements of choice, right? So a lot of people may not even have altruism or charity associated with their investment decisions. Maybe some of them simply want to say, hey, I want the highest returns. But here, through the loans and through the packaging of the loans, as well as educating the users who these people are in the back, a lot of people can make then smarter decisions on why and how their money goes to certain people, and what are the risks associated with it. Right now, a lot of these risks then are tied to macroeconomic trends. So maybe today, you're loaning out to young people because young people need cash more desperately. Right? Recently, maybe the iPhone came out and they kind of want to buy an iPhone, but they don't make enough money for it. But we need to realize that this action, right, depending on certain situations, may also be risky. And it is up to the people to choose at which time that they would actually invest and why and how. Right? Again, this is very much like the stock market.
How many people actually use Dianrong?
Okay.
What's the growth rate of your users, and what's the breakdown between China and globally?
Okay, so today, right? So number one, I think Dianrong has about a 300% CAGR, year-over-year growth up until this year. This year has been a little slower due to regulations and so forth. So in general, we have a lot of investing customers. So we have about, I think, don't quote me on this, right? The pure numbers are coming from marketing, right? But we have about 4 million registered customers. Out of these, about 1 million who actively invest, right, on a monthly cycle, right, on different things. Now, what's interesting is that we have more than 10 million registered customers. So the rest, the other ones, are actually borrowers. Today, because of online loans, because of the smaller amounts of loans that we have, all right, towards different people's situations in need, right, we are actually registering probably about 1 million customers a month. And all of them are actually coming online. Actually, I would say all, but the majority of them are coming from online, and these customers then get serviced by Dianrong as well. So in general, this is our current growth and customer base. We do about, for example, last month we did about 3 billion in terms of loans, right? So 3 billion RMB in newly originated transactions and loans.
You're not international, because I was did in my research yesterday. I saw you guys had the fully English website. It seems like
We do. We
you're
do.
now
We
also,
we are international, but the majority of the loan market that we service is today still in China. Today, we actually don't have a second market um, outside of China, even though this may become a reality very soon. Unfortunately, I cannot talk about which market and how and why we're doing this. There are international offices that we have. For example, today we have a Hong Kong office. Right? The Hong Kong office is more focused on wealth management opportunities and other things, right? So again, we do different things right now, but the majority of the work that we do today is still in China, and that's actually the biggest, I would say, battleground or the biggest market that we are focusing on.
sure. Okay, makes a lot of sense.
Yes. Now this doesn't include the fintech services that we provide, right? If you look at the systems that we have underneath, right, electronic wallets is actually not something that everybody can build, right? Especially dealing with large scalable transactions associated with it. Now, other things like a lending platform, right, a marketplace platform, the technologies behind servicing loans, right, big data risk, all these things. Today are technology driven, right? And technology is interesting is that it's all math and numbers based, and the way we build things is very localizable and internationalizable. So today, what we see is Dianrong technology being a driving force to push Dianrong's, I would say, services outside of China. But a lot of this time, right, it is actually collaborating with a partner or with an investor and landing our technology into their user scenarios. So those kind of projects are actually very international, and we have quite a few of them going on.
Hmm. I find it super fascinating because what you're describing here is, quite advanced financial products. And having lived in China a long time, both myself and John, we've seen, previously, if we look back, I don't know, 5, 10 years, the financial options open to most Chinese people were quite limited, and now there's been an explosion of and sort of almost leapfrogged into offering quite advanced, almost the world's most advanced financial products. Are Many of them are here now in China. What you've just described is a good example. What kind of uptake are you seeing from Chinese citizens here? How do you think financial awareness of all these like new products is growing in the market? Because you must have to do a lot of education, I would guess, for educating users about how to manage their money and how to use these services.
Yes. So what's interesting is that number one, I think Chinese users are very technology savvy. Right? This is a group of people that almost religiously worship technology, right?
Mm.
In a way where everybody adopts technology very easily and very quickly. Again, this is the biggest mobile market in the world already. What the other interesting part is that banks have not been keeping up. Right, so China is a relatively young economy, right? Where probably 30, 40 years ago it started, basically introducing capitalism. And at the times that the banks were making choices, they were following very, very safe and older standards sold to them by Microsoft, McKinsey, and the likes. All right, so we're talking about a banking infrastructure that's even more archaic than the US banking infrastructure. So, and then in between this time, right, there was a lot of state-owned enterprises, right, we call them SOEs, a lot of companies, a lot of relationships, right? Again, China is a more relationship-driven company. So a lot of these financial decisions by the banks are driven by relationships and by guarantees by the government, which means that they're also still risk-averse, but they don't really go into the faster-growing sectors of the economy. Right, that leaves a huge gap, right, into servicing the rest of the economy, right? So this gap is on the loan side as well as on the wealth management side. Essentially on the wealth management side, it's the same thing, right? So number one, Chinese people actually like to put their money in the banks, right? So there was always a banking kind of mode where everybody just stores their money in the banks, but not everybody actually bought any kind of wealth management products, right? So a lot of times when the banks sold wealth management products, they actually don't guarantee returns as they're supposed to. But so essentially in this case, right, many people just simply bought the most conservative part of the wealth management. It used to be that you had to lock your money up for, let's say, 3 months, maybe up to a year, right? And you get yield. It's very similar to the United States, right? Anywhere between 2%, 3%, 4%. But for 4% is actually still already high. But what's interesting is there's no financial products, let's say 5 years ago, that dealt with people who wanted to earn more than that, except for the stock market. Now, the Chinese stock market has been historically very volatile. All right, so there's only a small segment of the population that dealt with the stock market. For anybody who wanted to earn money between 4% to, let's say, 15%, right? There's not that many great choices, right? Maybe it is available for you if you want to go into private equity, but that means you need at least 1 million RMB or above in order to follow the regulations and actually join in private equity. Right, so in between this, right, there was a shadow banking world, where in China a lot of people used to do banking related activities, very much like peer-to-peer lending, but much more unsophisticatedly. Right, there's small loan companies, there's factoring companies, there's all these legally recognized companies who are pulling people's money together in some ways, and then lending them out to people, right, via their own relationships and methods of collection and risk. Right. And today with peer-to-peer lending, what happened was all of these things started to become more transparent, more technology-driven, and essentially the government likes that as well, right? The government calls that bringing sunshine to the shadow banking world, or when all the institutions participating in these transactions that the banks actually are not participating in and that the economy needs, right, starts becoming technology driven, all this information then feeds back to the government as well. And the government has actually a much clearer picture of how the China economy is growing and developing. So in this process, then people actually start to get new products, right? And these new products are very different than their old, I would say, archaic bank, investment related products, as well as these new financial services are different from what they can borrow at the bank as well.
Yeah, and I was going to ask actually about the government and kind of how they view peer-to-peer lending, because like when I first heard about peer-to-peer lending, and again, like, I mean, your company's not all peer-to-peer lending, but when I first heard about P2P lending, I think my first reaction was, okay, this is just a place that's rife for fraudsters, where people can come in and take advantage, because Chinese people, they're, as you said, they're looking for more opportunities to put their money to work, and at least when peer-to-peer lending really got started, there weren't that many options. But from what you're saying, the government is actually fairly supportive of peer-to-peer lending and what you guys are doing.
Yes. So what's interesting is that with China in any industry, right, as soon as it comes up, number one, China sort of manages the different industries, right, in a sort of watch and then regulate kind of mode, right, where they kind of step aside and watch what's happening, and then eventually follow up with regulations once the risk starts appearing. So all these fraudsters that actually appeared out of China, actually there were a few that was quite famous, right? They all came about when this industry is very young, and there's unregulated ways of doing things. And some people like us, right, are driven by technology and transparency and providing services. There's other people who are simply marketing and basically pulling money together and figuring out ways how to scam people. So today, I think that the Chinese government. So the number one, I think the Chinese government is in theory very supportive of this industry. Right. This is simply because of the inability for the banks in China today to participate in small ticket lending. right? They're not focused in such areas where the economy today is actually in desperate need of these things. And these small ticket lending is actually what contributing to the growth of the China GDP today. Right. So they realize that there is a group of people that need this money, and there has to be a good way to let them borrow and let them lend to. They also realized that China's economy, 40% of it, the lending associated with this, is dealt with shadow banking, and this was before peer-to-peer came about, right? So, which means there was 40% of the money being lent out in the system that the government does not have transparency to. So, for a transparency reason and a system integration reason, they would love to see more technology getting into those sectors. And essentially, with the existence of peer-to-peer lending and fintech, a lot of these companies are being pushed to adopt these methods, right? If not, then they cannot survive and outcompete the in the current environment. The third thing is that then they are actually putting regulations, right? What are the risky behaviors? What can you do? What can you not do? And these regulations actually have come out, and they've come out very strictly to all of the participants in this industry. They even crossed over to a lot of the shadow banking entities that we already know. And via these regulations, the government is actually issuing ICPs, which is an internet servicing license, right? And within these licenses, operating licenses, they're essentially making this business legal, right? But within here, then there's a lot of controls associated with it. For example, our industry today needs to be custodianized by a bank, which means not only are we providing the technology and information on top of that, we're also syncing this up with the bank and with the government, which means that every single number and transaction and people that we authenticate is documented, is booked, is cross-validated, so that we make sure that all these transactions are real. So in my opinion, I think the existence of fraud in this industry in today as well as in the near future is going to become harder and harder and harder. Now, of course, there's always going to be fraud on the borrower side, right? Or somebody comes in and say, here's my information, but all of this information is fake, and how are you going to, give me money associated with it? This is kind of like, identity theft in the United States, or basically people just straight out lying and disappearing with their money. And this had to do with China used to not having a credit system, or at least a well-working credit system. And a lot of people thought that, they can just scam money for once and just leave and be gone with it. It also existed where money used to be worth a lot more in China. Right, so there was a lot more incentive for you to borrow 10,000 RMB and then run back to your farm and never come back. Right, today it's actually not so as well. I personally think the post 80s, 90s generation, especially the 2000 generation, they've grown up with the idea that, credit is worth something, and they actually see it worth something. So today, for example, your credit record is mapped to Alipay, is mapped to a lot of internet companies, which means, if you have a bad credit record, maybe your trip to your future trip to Singapore, to Japan would be would be much harder, right? Because people actually look this up, right? As you know, in Alipay with Jima, right? A lot of these conveniences come with credit. Let's say you're riding one of these bikes or bike sharing, bicycles. If you actually have good credit, you don't have to put in deposit. There's many hotels today that you don't actually have to put down a deposit because you have good credit, and you can then just spend as you leave, right? So all of these conveniences, because China is new to credit, has started to appear, especially with internet companies, right? With the services and values that we drive, on our applications as well as on people's day-to-day lives. And so I personally think the next generation cares much more about their credit. So they're not going to, for a little bit of money, just ruin their credit for their lives. So this is a very interesting trend that I saw only in the past 5 years. It probably started occurring more so in 2014, 2015. But over the past 2 years, the market, especially the technology adopted market, has actually started to grown into these ideas and into respecting credit and what it means to their lives. There are also a bunch of scamsters in China, Right? A lot of these scamsters are essentially middlemen who gathers people who actually don't really know anything, and they scam for them, and take a cut in the middle, right? What's interesting about these, they work like identity theft agencies, but in the United States, in my opinion, identity theft people are generally hackers, right? They're located somewhere in the world, and they're hacking the system. In China, these, I would say, middleman, right? They're usually more manual. Right, they're very low technology focused, right? So they sit together, they call, they scam, they gather information, they even build up bank account records and all these things. But what's interesting about that is that with technology, you can actually circumvent their ways of operation, right? You can actually identify who they are because they're all coming from the same subnet, same location. They're pinging your application. The bank records don't really align to, let's say, e-commerce shopping records. So if somebody has this income, then they should technically be buying X amount of things on Taobao at this price range, right? And any deviance from that may be a question mark, right? Are they actually calling frequently and all these things? Now, so a lot of this information with proper authentication by the user is actually given to us, right, as fintech companies, and then we look for issues, right? We look for why do they correlate or why do they not correlate? And here there's a lot of, I would say, deep learning, machine learning associated with this, right? Graphical analysis and so forth, right? So all of these things contribute to the development of China fintech today. So it's much harder and harder to scam, fintech companies like us, and we're then if all of or if the majority of your borrowers are real and and the only reason why they're not paying back is because they're facing financial hardships, and these you can actually trend with macro economy kind of trends, right, based on all these micro things that you micro bits of information that you collect, then you can actually systematically trend for the future, use mathematics to calculate what is worthwhile, right, for the platform or for the investors on the platform to invest into.
Yeah, I think you made several really interesting points there. Um, Certainly, on the Chinese internet, I completely agree. It's with regard to doing anything online these days. There's a lot of it's increasingly everywhere. You have to do real name verification. We've seen this. I was just the other day. I tried to upload a video to Tencent Video, and I need to do real name verification even to upload a video these days. So in China, I think online activity is much more trackable. It's much more linked to people's ID card. It's a homogeneous market with a unified ID card system, which makes this thing easier as well for all these companies to integrate a unified system into terms of tracking people. And of course, the government requires it in many areas as well. So that what you said about reducing fraud and makes a lot of sense to me. I think that's quite a big difference between China and other markets in terms of like the amount of the requirements there is very, very common that you need to verify your ID. And also, we were talking on previous episodes, facial recognition technology coming in as well. So with all of these technologies evolving now, it seems to be that it's going to be easier and easier to track people over time. Which
yes, to be honest, right? So China is a country that adopts technology extremely quickly. So if I remember correctly, facial recognition was only a technology that became popular in 2015. So by 2017 today, I can go into a supermarket. There's actually a humanless supermarket today, or via camera recognition technology, right? So this is deep learning based on items, right, on shelves, right? Like let's say at a 7-Eleven, right? They don't call it 7-Eleven Family Mart. You can grab something. You can actually go to the door and basically, with facial recognition, pay, right? It's linked up to Alipay or Tenpay in the back. Right, it could be scanning a QR code, but then once you're identified and registered, you can actually pay with your face. For example, I just came back from Dalian, where I checked into a hotel and they had me facial recognize. right at the hotel, right? It's a very nice device, right? It looks like an iPad. But what's interesting is after I facial recognize in the hotel, then afterwards, every time I go to the hotel, the doors open automatically, right? The different checks are done. And what else is interesting is that my names gets correlated by all these staffs, right? So these staffs know actually I'm a customer staying there, and I think the system actually alerts them that I'm coming onto the premises and they should welcome me, right, with my real name. Right? So all of these technology-driven services is super interesting, and we see it across the spectrum in all these places. Or I've heard recently that there's a police department in China, in Shanghai, that started using facial recognition at bus centers, and in a single month they caught 4 fugitives, right, on their top list, right? Simply because these things are actually starting to recognize everyone, and in China there's a high amount of I would say high definition cameras installed everywhere. What's interesting about this for the lending environment is also these infrastructures may be available for different companies. For example, for companies like us, when we negotiate with the right entities and I would say, right governmental entities, we're able to tap into some of these resources to be able to locate fraudsters, to be able to locate people who are not paying back, and figure out how can we actually collect on behalf of the company and on behalf of the lenders. What other interesting thing about this is that our entire our online loan process is actually very short, right? So if somebody's tech savvy, maybe they can finish an entire loan system, a loan application by in about 2 minutes. And some of the key aspects of this is facial recognition, where not only do you do real name verification on your ID card, but we also match what's stored in the government database, right, on your ID to your face, to make sure that you are really that person. And then after that, then ask for a lot of authentications, right? Basically, your agreement for us to look at your public data, or your internet data, a lot of these other data for us to cross correlate and figure out how good of a lender or borrower you are.
I mean, you referenced yourself. You said the state-owned banks, they're not technologically driven, but they are, huge and very important organizations. How are they looking at this technological development? I mean, recently, for example, we saw, China Unicom, they got invested by from the private sector, and that seems to be like a very, very big deal in my mind, of like, for the first time, in technology companies like Tencent investing in a state-owned enterprise. Is it possible we could see something similar here? Just that's pure speculation, obviously, but like, what do you think is going to happen?
It may be so. So what's interesting is that I see a lot of banks going IPO, and many of these banks are going IPO. Let's say in in Hong Kong, right? They're not even going IPO inside inside the China exchanges, right? So within this process, a lot of, I think, private sectors have already been getting into these banks, right? So there's at least an infusion of new capital and a mix of ideas happening already. What's interesting is that I would say banks are actually capturing or dealing with internet companies as well, right? So many of them are actually buying small teams, right, from the internet side, and then incorporating them as part of the bank or part of the loosely collaborated entity outside the bank. Maybe they will incorporate a small loans company, but it's majority funded by the bank to start experimenting in fintech and in peer-to-peer lending and so forth. So we see number one, we see banks being threatened, right, by the rise of internet companies. Especially, I think Yuobao was a big reminder for them on how potentially the world can become. Right, so everybody is moving towards a direction. Now they're coming from bottoms up, right, from a financial directive, moving towards a technology kind of driven world. And then there's a lot of tech companies that are coming from a technology driven world and moving into the financial world. So I personally think in a few years, right, there will be people who mingle in between, right, or the services will no longer be that easily identified being a tech service or a banking related service. What's interesting is that in general, the tech related services, they have a much more more keen note onto customer experience, right?
Yeah.
So in general, they win on more on what is the better experience side. Now, the banking world, right, they have more trust associated with how people's money are being stored. So we see actually even an obvious age divide in who uses the internet technologies and who uses actually the banking technologies. But I think as the younger generation grows older, right, the people who are majority using Alipay today are post 80s. But in 10 years, right, they're going to be 40, 50 years old, right? So which in that case, then they are prime banking customers. And by then, if banking doesn't have the right technologies for these people to use, then they may lose them forever, right? So here, there's a lot of urgency and a lot of, I would say, I personally think the banks feel it much more than the banks in the United States or in Europe.
Sure, but it's only a matter of time, right? It's coming. This is something that will be hitting everyone globally eventually.
Yes,
We would
yes,
hope.
there's actually new private banks already, right? So again, China, there's 3 new private banks, right? So if we're talking about the Alibaba Wangshan Yinhang, right? So that's one of the private banks. We have the Tenpei Weizhong Yinhang, right? So the WeBank, and we have a third bank called Huaxia, right? So these 3 banks are actually all private, right? So all the other banks are all government related in some way, right? So when we see the existence of private banks, then we see what happens in the future, right? So is there going to be a blend? Is there going to be healthy competition? But not everybody is able to get these banking licenses, right? It's actually very extremely hard to get these licenses. And once you're under these licenses, you're subject to also banking rules, right? So banking rules are actually not as flexible as the fintech rules, right? The banking rules are still limited to Basel, limited to all these, I would say, financial rules developed over the ages. And some of this would also limit the type of services that they provide as well.
Yeah, so it's my bank, WeBank, and
Mm-hmm.
Huaxia is the third one.
Yes, yes.
Okay.
But
Who's
what's
Huaxia
interesting
bank?
is that I personally think this trend is going to happen. But what else may be interesting is that I personally think the rise of blockchain may change all of the current states, right? So it used to be that people thought fintech is going to be a reshuffling of all the cars on the market, where then some banks will actually be reduced to an infrastructural set of services, and some banks will actually stand in the customer set of faces along with internet companies. But what's more interesting is that with China's active adoption of blockchain, as well as the government, huge interest in how blockchain works and how blockchain is being pushed out to the society, there may be actually a different shift as well. As we know, blockchain could essentially facilitate the automation of business, as well as the business-related transactions. So today, the reason why we have Alipay versus the bank is because the banking transactions and services don't service us in the same convenient needs as somebody like Alipay. But in the future, when these all disappear and become automatable, maybe everything becomes an infrastructure, which in that case, then maybe there's a re-rise of banking and banking-related technologies.
You mentioned before about using data to track purchase history and previous previous behavior on the phone or wherever. Like, there's been a lot of talk about how in China people are less concerned about their privacy, concerned about their data. How would you describe that that environment in China about people's data compared to more mature, I don't think we can say more mature markets anymore, but compared to the US and Europe, for example.
So I think in general the public um, does care a little bit less about where their data is going to. I think that the public is more realistic, right? So the China public, if they realize they can get something for their data, they're willing to share their data. But if they realize that, hey, they're being, robbed of their data, then in that case, they're not. But I will tend to argue that in the United States it's almost the same thing, except there's some very vocal people who don't like to share their data at all, and they like to publicize about it. So for example, in the United States, right, technically, when you're using Gmail for free, Google is looking at all your email data, parsing it, making sense out of it, and then throwing advertisement against it. Now, of course, they promise you that people are actually not looking at not there's no real people looking at this, right? There's just machines and providing you a service. If you look at the financial market in the United States when you're applying for the loans, you are actually giving a significant amount of data. Right, when you're applying for health insurance, you're also giving us a significant amount of data. So I think people understand that, hey, look, if I want something, maybe it's a loan, maybe it's cheaper interest rate on a loan, then I need to give up some of my data associated with this, right? Now, people are very upset, let's say in the United States, if Comcast started selling their data, right? Because they don't see a way where, their browsing behavior or their TV watching behavior comes back to them. In China, I would assume it's the same thing, right? If, a telecom started selling their data, a lot of Chinese customers may not be that happy associated with it as well. So today, I think, especially within the recent year, 1 year, there has been a lot of government regulations associated with data, how data could be translated to and sold and so forth. So there's actually a much better tightening on how data is being transported and being taken. But I think for the average consumer, as long as you provide them a good service and you let them understand that, hey, look, we need your data to give you a better service. Most of them are readily available to do so. And if they're not, right, a company like us, we don't actually collect their data. Let's say if somebody applies a loan on our platform and they're unwilling to give us their Alipay data, in this, there's actually a whole process of authentication associated with us and Alipay and them, right? But let's say they don't want to, they can actually skip this process, right? But the side effect of skipping this process means that their interest rate will be actually a lot higher. Well, not a lot higher, but a bit higher than their if they were to participate, simply because they're unwilling, which means that we don't know whether they're unwilling because of privacy or they're unwilling because they're a fraudster and they don't really have a correlated set of data. And if it's the latter, then we need to calculate all the associated risk within that, and statistically map them into a higher interest rate category, so that everybody then statistically pays for the fraudsters, right, who actually fraud the system. So here, then people have a choice, right? They can choose high interest rate or trading in their data for something. Now, of course, we offer the same thing. So, for example, for things on Alipay, there's not really people looking at what people are really buying. Are these, because a lot of things that people buy online are sensitive, right? But we're more looking at, okay, what are they buying, and are they basically the categories of the things they're buying, are they matching to average expenditures in this category? Now, are they above average or below average, right? Maybe they're 50% above average, which means they're actually a bigger spender, right? Based on their salary, right? This actually calculates differently to their income and debt ratio and will most likely affect on how much money we loan them. Right, so there's a lot of these calculations that exist. Right, maybe there are some categorical identifications. Maybe this person says they're married, but in China, it's very hard to figure out whether they're married or not. But it's a little easier to figure out whether they're buying, kid stuff on the internet. And if they're buying kid stuff on the internet and there's more than one device on the subnet, people accessing our servers and so forth, there's a correlated set of methods for you to give heuristics on whether they're married, and being married or not is a factor of stability, which then would also change interest rate in a certain way. Again, a lot of these methods are used to cross correlate and identify basically to know more about the customer. If they're unwilling to provide this information, maybe they simply get a higher interest rate, or maybe, at a point where we cannot tell anything, then we would rather not loan this money to this customer and rather give it to somebody else.
Sorry, but looking at retail banking, which is in some ways kind of what you guys are doing. I mean, I'm curious. So, how do you describe the difference between what you do and what someone like Alipay does with Yuebao, or with Tencent, or what Tencent does with like Ling Kong and things like that?
Yeah, so they're actually not doing retail lending. So number one, actually the majority of our Dianrong loans, they may actually go into businesses. What's interesting about China businesses is that many people in China borrow on behalf of their own credit for their business. So for example, they need 50,000 RMB for the tail end of a car installment or a car payment. They may actually borrow personally in order to actually sub-factor into their personal businesses. So again, I think risk associated with person as well as with company is evaluated together in order to figure out what is the size and risk associated with the loans that we give. But to go on to your question, I think Alipay, Tenpay, they're actually not really doing lending, right? So if you look at something like Yuebao, it's actually a money market fund, right? So that is really a fund based on basically based on money markets, right? Based on how world's currencies are changing and exchanging on top of that, right? The risk associated with a money market fund is significantly lower than any risk associated with just pure lending. Now, of course, Alipay doesn't do 100% money market fund. Um, their fund is big enough that they could take a portion, right? Maybe a very small percentage, which is already a lot of money, right? It's billions of dollars, and they will then lend it to large secure institutions that have backing, right? Maybe they'll give it to China Oil. Maybe they will give it to some other companies, right, that need basically lower interest rates. But this interest rate will then factor into the money market fund to make up for Yuebao's blended rate. In general, this blended rate is much lower than lending per se. Right, so again, they're not participating in direct lending, but the experience to the end investing customer is slightly similar, right? Because they're putting their money, maybe they're putting 1 RMB or even less, 1 penny, and they are getting interest rate accrued on top of that. And eventually, when they want to exit, they basically change, or they basically sell their portion to somebody else who's coming in, or they basically give it back to the money market fund, and there's a way to basically consolidate all of this, right, and to do gotcha in the middle. Right, so in this way, right, it's actually a different financial product, even though the end customer experience is similar. Now, what's different about Dianrong versus Alipay is that number one, the interest rate is higher because we are lending to people, right? And with people, with companies, right, the interest rate is generally higher than any money market fund, right? Um, the second thing is choice, right? So people then also have a choice on where they're lending to, who they're lending to, which part of China, which sector of people, and which industries, if they choose to customize. And they also get more transparency, right? So for example, if I were to put money in Alipay, I don't really see where it goes, right? There's no interface, nobody that tells me, okay, I bought this, right? And this is what happened underneath financially. And here's the small portion that went into China Oil. Right. But in their own, I see exactly where my money goes into, down to the very, very last fraction of a penny, to different people. So I can actually look at my portfolio, even though it maybe constitutes millions of loans. I could pick out, the ones from Dalian, the ones from Chengdu, and I can say, hey, look, right, why are there people borrowing in Chengdu? What are they borrowing? And what does this data mean? And here, if you actually play on the numbers and the attributes that we display, now, of course, internally, we have much more attributes. We even get a micro sense of how Chengdu as a city is developing, because when people are borrowing against to a certain needs, then that means the city is actually thriving, it's actually growing, it's actually developing in certain ways. Is it are there more restaurants that are borrowing lately? that actually may not be bad, right? It may not be that restaurants are failing and they need to borrow money. It may be that restaurants are expanding and they want more money, right, to deal with the incoming set of population that is coming in from Beijing and Shanghai and other cities. So that's actually the part that's really interesting. Right, so at the end of the day, right, the end customer, if they're lazy, they get a similar experience to Alipay and Yubo, except the interest rates are higher. But if they want to learn about what's happening underneath, for a company like us, right, they can actually get down to very, very small details, and to understand and to realize that, hey, this is how most financial systems work, and here's the logic behind it, right? And let me then use these ideas and figure out what does it mean to put my money into a mutual fund, in a private equity, in other scenarios.
That's really super interesting, actually. It just begs the question: you've got all this data of all these users across China. Overall, just broadly speaking, are parts of China more financially savvy than others? Are
Oh,
you seeing patterns there in terms of, like,
yes,
you would
yes,
expect Shanghai and tier one cities to be more financially savvy,
yes,
but are there any interesting findings that you
yes.
unexpected?
Yes, so I what's interesting is that if you look at my WeChat moments, you guys could probably take this and post it somewhere on your podcast. We just did a research recently, based on D Hygiene, which is a media company, a data media company in China, and Alipay expenditure records, or they have collaboration associated with Alipay data, and then they mapped this against their own data. So there's a very interesting infographics about which cities are more financial savvy. Generally, it is the first tier cities. So we're talking about Beijing, Shanghai, Shenzhen, Guangdong, right? And these cities have also different behaviors. For example, in Shanghai, women invest much more than men, right? And what are the age profile, customer profile, and so forth. Different age groups borrowing money and having actually, I would say, different attitudes towards borrowing money. Right? Are they borrowing money for quick expenditures, right? Mainly basically grabbing opportunity costs and then trading that with interest? Or are they borrowing money because it's for long-term business needs and so forth? So all of this data we do have, and we strip out all the personal identifiable information, and then we map it against what's happening in China in this industry, and even in state or city level. And we look, right? And this is actually part of our job too, right? So we need to trend what is happening to the economy to make sure that we give the associated returns back, right, to our lenders, and we actually give the right interest rates, basically the lowest interest rates possible, right, to the right borrowers. So all this information is used for us to simulate and trend against the future. Yeah, feel free to look at my WeChat moments. I just posted it yesterday, and you're going to get a bunch of infographics. I think most of it is in Chinese, so maybe you guys will have to find somebody to translate it for you. But in general, this is very, very interesting information.
Sure, maybe we'll put a link in the show
Yeah,
notes.
definitely, definitely. But Ling, so before earlier in the episode, in our conversation, you mentioned that Dianrong does other things besides P2P lending. So tell us about the other parts of your business that's not about lending money or doing P2P lending.
So in general, we put peer-to-peer lending so as the platform that we have, right? So this platform is essentially on the bottom, providing electronic wallets, right? Providing financial services to people, and then people can invest, see what they invest into, right? So this is much more geared towards a wealth management point of view. Now, a lot of our investments go towards actually acquiring customers who are our borrowers, right? So again, this is associated with peer-to-peer lending, but it's no longer just peer-to-peer lending, right? It's pure lending because in this way, right? So a lot of this customer may be actually given to banks, they may be actually given to small loans companies and so forth, right? And we actually even have our own. Right, so in this case, right, there's a lot of, I would say, technology-driven services associated with this. It used to be that, a lot of actually in the United States it's more like this, right? Or there's a lot of people, right? For example, insurance salesman, right? Loan salesman. They would go around, they would find customers, people who are in need, get them to fill out a piece of paper, and then eventually have these documents, give it to a risk department. The risk department then will analyze all of this stuff, and then eventually make a decision based on risk-based pricing, right? So in a fintech company, we do this a bit differently. Right. So number one, why do we even need to send people to find other people who need loans, right? So why can't we do this on the internet? So there's a lot of I would say optimizations and projects built towards acquiring customers online. So what do you say to them, right? What are the flows? How does the ad exchanges work, and how do you bid towards them? As you know, China is a mobile market, right? So in terms of when mobile applications display your applications, right, your advertisement, right, you actually already know a lot about these customers already, right? You may already know their general age profile. You may need to know some taggings. You don't know what they're reading, let's say on a news site, right? But maybe you already have some categorical tagging. Maybe this person reads entertainment, reads finance, and reads education, right? And maybe you have some device IDs associated with, are they using Android or iOS device, and so forth, right? So all of this information is using technology to then do real-time bidding on, what do you number one, on how much are you going to pay for letting this customer see your ad. And then number two, once you paid for this customer, you need to show them the right ad, right? Targeted towards what matches to them so that it converts better, right? So there's a ton of technology associated with just acquisition, right? Tagging, acquisition, and very, very smart dynamic ways of bidding. And this goes into AI and machine learning as well. Right. So once that happens, right, we have a lot of these customers who go through maybe a light process on the internet. Some of them actually, when their amount is small enough, right, they have a lot of information quickly done, right, or they have a lot of information on the internet already, right. They actually get a loan directly, right. So this may actually be peopleless, right. So we're talking about then, big data risk, systems that take all this data, crunches the numbers, figure out, the fraud likelihood. So there's the anti-fraud systems and so forth. That all together, right, then give a quick answer to these people that eventually will maybe ending up with a loan or with money in their bank account in less than 10 minutes, right? So we have some cases where a young guy goes on a date, right, but realizes that, or maybe goes on an activity with a group of friends and realizes that, hey, he's short a little bit of cash, right, because everybody's taking in cash and not credit card for I don't know, to do a payment. Right, so then what he does is he goes to the bathroom, he quickly takes out his mobile, applies for a loan in less than 2 minutes, and actually gets the money in his bank account before he needs to pay for the bill, and everything happily goes through. Right, but then there's a lot of customers who we need to analyze. Maybe they're borrowing for a restaurant, and their credit card transactions on their restaurant is not enough for us to identify who they are, or maybe they're doing home improvement or basically larger sets of loans, and these people then would, their location and or the location of their company would then appear on a map. And we have our salespeople, they kind of, run around with an application as well, kind of like Uber, right, or the Uber drivers, and different spots will light up on the map, and they say, okay, well, this is very close to me, let me go and service these people. let me figure out who they are, how they are. And a lot of this work then is also done programmatically using applications and so forth.
So actually, we're coming close to the end. But one of the things that I really do want to talk to you about is blockchain. You and I have spoken about this a little bit previously. So for blockchain, what do you think is the most interesting, and what are some use cases of blockchain for a company like Dianrong?
So I think more about blockchain in a more broad spectrum. So number one, I've been talking to actually a lot of people, including the world's, I would say, foremost blockchain experts. And what's interesting for me is that a lot of them think still in terms of Bitcoin and digital currencies. right? So a lot of people are very adamant about blockchain being decentralized. In my opinion, that actually may not be necessary. Right, blockchain is a way to it's number one. We all know it is a distributed ledger, where information gets basically synchronized, right, to everybody on the blockchain, right, on the node. What's interesting about this is that yes, it is a decentralized system way of working, but it doesn't mean that there cannot be a centralized point on the system that stands as an authority, right? So, for example, you know, when all the chains gets basically when all the nodes gets the information, there could be a supernode, right? Actually, we call that supernode inside blockchain as well, right? Where the supernode gets access to all the information, and in that case, if the supernode is the government, then anything on top of a blockchain network could technically be regulated as well. All right, so that solves the government regulation problem, and I think most of the Chinese government understand this, that okay, so blockchain isn't just Bitcoin, right? Isn't something that we cannot control. It's rather something that we can control. All right, so moving past that, right? Blockchain, if everybody has information at the time it is generated, number one, the likelihood for it to be fraudulent is very, very hard, right? Because a lot of information needs to get authenticated by a lot of different people. It is a way of collaboration that it used to be all driven manually. So, for example, let's take a transaction like buying a house. Whether it's in the United States or in China, buying a house has financial transactions as well as the purchase transactions. Now, a lot of these things needs to be notarized, right? So you go to an agency, you need to get this information stamped and confirm it's real. Witnesses in case of court, right? You know, when you go get a loan, you need your company statement saying yes, this person works here, and he or she owns this much money, and you know they have a good KPI. You know, you go to the bank, and the bank will say, okay, this person has actually had a stable bank, I would say, record for the past 2 years or past 6 months or whatever that they need, right? So there's all these institutions that needs to collaborate together to provide the right set of information with the right set of signatures and chops in order to make a complicated transaction like this to happen. All right, so that is the current world as it is today. All right, now imagine if all of these institutions are all on the blockchain, right? Which in that case, they can actually start to talk to each other more automatically. Let's say, let's let's take some programmers and build a process, right, for you know, buying a house. Which in that case, you know, as we initiate buying the house part, right, somebody evaluates the property who is on the blockchain, has this information already evaluated, so they put it up and they stamp it, right, digitally. All right, and the company goes and says, yeah, this person is a great person, right? We will just automatically pull up their HR records, you know, give you a summary of this person as well as how much money they're making, and they stamp it. The bank stamps it, right? In this case, there actually is almost no need for a notarization company, but there may be needing a lawyer firm, right? Maybe even the court system and so forth. So if everybody stamps this automatically on the blockchain, the entire infrastructure associated with the manualness of this transaction is all gone, which means then potentially in the future, let's say 10 years from now, I could buy a house literally within minutes. I look at the place, I say, this is cool. Okay, let's get on this transaction network, and all these things gets associated. So I already know that this house does not have any debt associated with it. Here's the fair value, right? I do have enough money. The bank is ready to give me a loan and everything. So why don't we now, I don't know, use our facial recognition or use our thumbprint and just nail the transaction here and now, and everybody goes a separate way, but I just now have a house, right? So that is the ultimate end state of a blockchain. Now, to get there is actually pretty hard, right? So I personally think blockchain is very similar to how I view the internet in back in the the mid 1990s, right, where the internet first came out, and there's a lot of companies like American Online that built their own private network, right, because it was very hard for machines to even connect to each other, right, because there needs to be fiber infrastructure and all that stuff, right. Today, same way, right, now all the fiber and infrastructure is there, but it's very hard for machines to connect to each other because everybody has to get onto a new connection network called blockchain. And there's a lot of protocols out there, but I think eventually they'll all merge or figure out how to talk to each other in similar ways. All right, so as different entities come onto the blockchain, then different business processes can then be automated. Right, let's take a simpler case. Right, take our collaboration with Foxconn kind of case, right, or within the Foxconn network, right, they purchase things, right, they in order to eventually build for Apple. Right now, their supply chain is actually extremely deep. Right, they have 8, 9, sometimes even 10 layers deep, where it's very hard to trace what money goes to whom, what items goes into whom, and so forth. So once we actually convinced to put Foxconn on this blockchain. That means actually everybody who is providing or who is trying to sell something to Foxconn wants to also get onto this onto this blockchain, which then means that the financial transactions on top of that would be automated. The legal documents associated with all the business transactions can then be built in as smart contracts, and then the items that are shipped can be then tracked via IoT as they are already today, right? And different things are recorded differently, and you can see the massive amounts of business, I would say, automation associated with this, and then also the massive amount of information that leads to financial services that are available on such a network. And why Foxconn, right? Because number one, they have a large network, right? We're talking about billions of dollars of transactions, right, onto this potential blockchain as well as on their supply chain. We're talking about direct manufacturers up to 10,000, right, or 100,000, actually up to 100,000 direct manufacturers they're supplying with, and all those indirect ones down the chain. There's going to be millions, right? So once you onboard all these people, then what about the other services provided? Right, then you have more advantage, right? So maybe you onboard their HR system, which in that case, the employees that they have can then buy houses, right? Because now you start onboarding banks, you start onboarding telcos, you start onboarding, I would say, legal entities, lawyers, and this then becomes an ecosystem that grows larger and larger and larger, and that starts automating all sorts of these kind of transactions, and that actually makes lives ultimately easier for a lot of people. Take something like the Chinese visa, right? The Chinese visa for you in the United States, or for maybe a Chinese person to go to the United States, the same thing. That you need to provide a lot of documentation, some of it from your work, some of it from recommendation letters, all this stuff. And then you need to send in something via paper. You need to wait a few days for this to be chopped, right? Get research and then get back to you so that you could travel. But something like this, in China may even require financial transactions. You may need to put 100,000 RMB in your bank locked, or you need to have some specific associated value of assets, right? Maybe it's a house owned under your name, and you need to get this notarized and locked before the U.S. government will even consider giving you a visa. Imagine all of this are on top of a blockchain. That means all of this information is available. It just needs to follow the right programs and protocols to understand when to provide what information, at what secrecy, right, or what authentication scheme. And based on this, then everything happens much faster. So I do think if the world is on top of blockchain, then many things that we find slow today, our future kids, right, may find it to happen very, very quickly. Um,
Yeah,
I,
that's
I can I, I
sorry.
can give you a very, very interesting scenario. So when I was in Amsterdam on a blockchain conference, right, or I was speaking at a blockchain conference, one of the presenters actually had a very, very interesting blockchain applications. They were taking Amsterdam's entire electrical system, because in general, in order to provide electricity funding on an electrical system, you need a backup battery. On this backup battery may be 5 million megawatts, right, for a city like Amsterdam. And they're taking this and they're distributing it, right? So they're no longer building the backup battery, but they're putting logic on top of blockchain, but via programs in the batteries that we have today. Maybe it's in your Tesla, maybe it's in your TV, maybe it's everywhere, right? So when the city then needs emergency electricity, instead of charging these batteries, they actually unload these batteries back onto the electrical grid so that the electricity will actually go somewhere, right? This is an interesting use of blockchain. But one step further is that they say, okay, so eventually in the future, if Tesla supports self-driving, let's say you're sleeping and somewhere else in the city is going to or about to experience a blackout, right? If you let your car automatically decide on your behalf, then your car could wake up, drive to that part of the city, unload half of its battery, make some money for you because you're saving the city a lot of backup battery and all these costs. Come back to your garage and charge, right? Because there's more electricity inside this part of the city, which in that case then your car now can automatically via AI make a decision to make money for you and start driving around. Right? These are super interesting concepts that are available via blockchain because blockchain facilitates and automates business processes. And today, the majority of our lives are the slowness of our lives is actually based on these business processes.
Yeah, I mean it's absolutely amazing. I think kind of what you're describing. It's funny because these days it seems everyone's kind of paying attention to the ICOs and kind of what's happening with Bitcoin and things like that. When the truly world-changing applications are in some ways a bit more boring in a way, because but at the same time you think about the implications of all that automation, and we're looking at, as you were saying, a much faster, instant kind of world that we could possibly live in. Whether or not that's necessarily desirable, I think is a bit of a different question. Personally, I kind of wish sometimes things were a bit slower, but certainly applying for visas and purchasing things, like having a way to do that faster. Do that, to lower the friction to almost zero. The possibilities once after you do that are staggering. In fact, well, Ling, again, thank you so much for taking the time. We realize that you're pretty busy, but it was great. This is a great conversation about Dianrong, about fintech, and also a whole bunch of other stuff. Thank you so much.
Thank you guys as well. It's a great pleasure chatting with you guys.
And to our listeners, if you enjoyed this episode, we would really appreciate it if you took the time to leave a review on iTunes, or if you're on Pocket Casts or Overcast, you can just press that star button, and it'll recommend this episode to all of your friends. It's a great way to show your support.